What's up guys, welcome back to my channel. My name's Louis and on this channel we talk all things real estate, personal finance and investing. So if you've been watching some of my previous videos, let's say the last few weeks or so, I've mainly made videos about real estate. So before we jump into the title of this video, I want you guys to let me know whether you are more interested in real estate videos or stock market investing. I really try to balance the two as well as include personal finance videos so that it is a good combination for you guys to watch, and there's a lot of information and a lot of knowledge that probably will help you. With that said, I really want to make content that you guys love, and if you guys can let me know if you prefer stock videos or real estate videos. So let me know if you enjoy watching stock videos more than real estate videos, or maybe you like watching both of them. This will really just help me to create content that is tailored to my viewers, and this will ultimately help to improve my skills as a South African YouTuber. With that said, the topic of today's video is not about real estate, but it is about stocks. So like most of you guys know, stocks can be a very powerful asset class that can help you grow your net worth much quicker than traditional asset classes. Although there is a lot of risk involved with stocks, you really just need to be able to do your own research and to determine whether this is a risk that you are willing to take. With that said, today I'm going to share 5 stocks that you should own that can set you up for life. Just a disclaimer, this is not financial advice. This is just my opinion, and these are stocks that I really like. You've probably heard of them. And these are big companies that has been doing great for the past couple of years, and I personally feel that they will continue to do so. So with that out of the way, you guys should really just do your own research. Don't go and buy these stocks just because I'm mentioning them in the video. I really want you guys to open up towards researching these companies, and maybe you should go and have a look at the information that I'm sharing and kind of just dig around a bit. So if you are interested in my favorite stock, I'm going to share that specific company at the end of the video. And this is one company that I really like investing in, and I feel that this company can double your money within the next 5 years. So with that said, the first company that can make you very, very rich if you invest at the right price is Apple. Apple company is obviously a company that you have heard of. Everywhere you look, you see Apple devices. Recently, Apple has been catching up to companies like Google with their ad revenue, and because of the newest privacy laws with the devices, they will start showing more ads to their consumers. What intrigued me was when I looked at the company's graph over the last year, they are only down about 1%. And this might seem like, okay, this is not a good return, but if we compare this to other companies during the last year, they are really, really stable. The company is just massive, and there's so many things that we can say about Apple themselves. I'm gonna share a few key data metrics with you guys about Apple. So Apple's market cap is $2.48 trillion. This is definitely a company that has been growing tremendously, and I mean, I don't see this company going out of business anytime soon. They also pay a small dividend, although it has been decreasing. This is definitely another advantage. So what I want to show you guys is just one part of the company that I like. If we look at their revenue meaning the total amount of money the company makes before their expenses is deducted, and net income, also known as earnings, we can see here that the company's revenue has been growing steadily over the last couple of years, but their net income has been increasing more than the revenue, meaning that the company just gets more profitable as time goes by. Another thing that I want to show you guys is the total free cash flow of Apple. If we go to their financial statements, to their cash flow statement, at the bottom we can see that Apple currently has a total free cash flow of $92 billion. This is great, and by all means this is definitely an important thing to look at when investing in companies, because cash flow is ultimately how we can see what the companies are doing with their money. If a company can't generate free cash flow, there's definitely something that is eating away their money. The cool thing about Apple is that they have been growing their free cash flow position quite steadily over the past couple of years. And this is definitely a good sign. Why am I mentioning this to you guys? This is definitely not the only stuff that we need to look at. This is just to give you guys an idea. The current recommendation of analysts is that Apple is an average buy of 4.1. This means that 29 analysts suggest that it is a good buy at the moment. Never mind that I don't really listen to what other analysts say, because they always make weird ass predictions. But what I really do like is that Apple is currently trading close to its 52-week low. Let's jump to the second stock, and the second stock is Google. So obviously we all know Google. It's literally part of everything I do every day. If I want to figure out how to freaking repair a car tire, what do? We Google it. If we want to find out where to drive or where to get coffee that is the closest to us, we use Google. Google is such a big part of our lives, especially mine, and I love using the platform. Google mainly makes their money through ad revenue, and unfortunately after the tough economic battles, their revenue has definitely gone down. Although this is bad, this is a great opportunity for investors like us, because the stock is trading for lower than what it is usually trading. If you know anything about Google, or if you have been following the news about the company, they recently had a stock split, which means that the price is lower than what it usually was, which makes it easier for normal people to invest in the company. Before, it was trading for, I think, around $2,200 for one share, and now it is trading around $107. So this makes it much easier for people to buy, because it won't cost you literally an arm and a leg. Google is a company that I have been dollar cost averaging into the last couple of months, and as soon as I see the stock falls, I buy some more. Just to give you guys a bit of insight about the company, Google has a tremendously good net margin. Net margin meaning showing how much revenue is converted into earnings. And currently the net margin of Google is 25.89%, meaning that almost 26% of all revenue that they make is earnings. Another great advantage is that Google's revenue is increasing with 26.27%. This means that this company is continuously growing and growing. The last thing that I also just want to show you guys, if we jump to their financials again and we look at their balance sheet. I love looking at big companies' balance sheet, and currently Google has a crazy amount of assets. They have $359 billion of assets. So if they had to sell all of their assets, they can pay off their liabilities 3 times. And then a last quick thing that I want to show you guys is also the cash flow. Google sits with a cash flow position of $67 billion. Although this is less than what Apple has, To put this into perspective, from 2019 until 2021 or the 2021 financial year, they have doubled their free cash flow position. So this is very exciting, and this is definitely a stock that you should consider. So number 3 is a company that I've spoken about before, and it is Coca-Cola. It's such a solid company to invest in, and I feel that this company will basically live on forever. So I personally really enjoy Coca-Cola's beverages. Obviously they don't sell just Coke, they obviously have stuff like Sprite and Powerade and a lot of other stuff. How many Coca-Cola beverages do you think is sold per day internationally? I'm gonna wait until the end before I tell you guys this, because this is pretty insane and I really didn't think this is true, but it is. Another thing to put this into perspective, Coca-Cola is a great dividend stock. Currently they have a dividend of, let's see, 2.86%, which is not the highest dividend. The insane thing about Coca-Cola is that they have been paying consecutive dividends for the last 60 years. This alone makes this company a great investment. It's a solid stock with a great balance sheet. It has solid net margins. To show you guys again, the company has a gross margin of almost 60%. Personally, I feel anything above 45 is good and anything above 55 is great. The net margin is also 23.16%. So Coca-Cola is a great and solid long-term investment that can help you to improve your financial position and grow your net worth much easier than traditional ways of saving money. Then number 4, which is a very cool company that I also really like a lot, and that is Visa. Visa is the company, you know, everyone has a check account or a banking card or a savings account with that small sign which shows Visa. They currently have a massive net margin of 51%. This means that 50% of their revenue turns into earnings. This is insane, and this is by far one of my most favorite companies. Again, Visa is a company that also pays a dividend. Let me just check what it is. It's not that big. It's around 0.75%, but I mean, this is definitely a company that you should consider. They are currently trading at $198, which is definitely a fair price to buy this company. Personally, I feel that this company can give you a 50% return over the next couple of years. The last company, which is one that I really like, obviously I've been mentioning that I like all of these companies, but that is why I am sharing them with you. Most of them have been taking a hard hit over the last couple of months, and this just gives us opportunity to invest in a company at a fair price and sometimes even below a fair price. And the last company, if you guys could have guessed which one it is Alibaba Group. Before we jump into this company, I wanted to share the answer of how many drinks Coca-Cola sells per day internationally, and it is 1.9 billion drinks. So yeah, I'll leave you with that. If you are aware of the company and the news that has been going around, basically a lot of investors are fearing that the company will be delisted from the New York Stock Exchange. And although this can be possible, I highly doubt it. And I personally feel that China as well as America will really lose a lot of money if this happens. And luckily, the latest news shows that they are really trying to get a solution. The reason why I like this company is because I feel that in the future, when everything goes back to normal, the company will start doing very good again. At the moment, the company's net margin Is around 4%, which is very bad. But just have a look 2 years ago where the net margin was around 30%. When we look at the company's financial statement and we have a look at their free cash flow, just remember this is a Chinese company, meaning that the currency is Chinese yen. But in 2021, their free cash flow position was 188 billion Chinese yen, which is around 20 billion dollars. And the thing is, before everything has really been derailed, the company has been growing their free cash flow tremendously year over year. Another thing that I really like about the company is their net income as well. Again, the 2021 year, their net income was 143 billion Chinese yen. The reason why this company will definitely survive this downfall is because of their financial position. They have assets of around 1.7 trillion Chinese yen. Again, I'm not sure the correct amount in dollars, but to give you guys an idea, they can basically pay off all of their liabilities with their current assets. This is not total assets, but current assets. Another thing that is pretty insane is that the company can pay off all of their total liabilities within 2 or 3 years of operating cash flow. Operating cash flow is how much cash the company brought in from its core operations, which is obviously e-commerce in Alibaba's case, during the reporting period. This is not the same as free cash flow. Free cash flow, there is no expenses that needs to be paid, whereas operating cash flow, they still need to pay expenses. The last reason why I like Alibaba is because they are also involved with cloud computing. The cloud computing business has been growing 62% year over year. This just means that the company is really in such a good financial position that they continuously grow. They sit with a whole lot of assets and they have a very big pile of cash. I feel that these 5 companies can really help you and set you up for life. Just remember, this is not companies that will make you rich within a year or two, but this is a long-term investment. When I'm talking about long-term investment, I'm talking about around 10 to at least 20 years. This is something that you buy and you hold it forever. This is why investing is a very tricky business, because a lot of people want to invest and get rich immediately. Unfortunately, it doesn't work that way. Just to give you guys an idea, someone like Warren Buffett rarely sells his stocks. He buys them and he holds them forever. Again, like Coca-Cola, Warren Buffett owns Coca-Cola and he has been owning it for a very, very long time. So guys, I hope that this can help you. Let me know which of these stocks you really like. Are they stocks that you would consider investing in? Are you invested at the moment? Again, this is not advice. This is purely my opinion. And hopefully you can do your own research so that you can determine whether it's worth your hard-earned money. With that said, guys, I'll see you in the next video.